Good evening and welcome to tonight's market report. Let's start with a quick snapshot of today's key numbers. The Nasdaq closed at 25,137.69, down 2.15%. The S&P 500 fell 1.21% to 7,408.30. The Dow Jones Industrial Average showed more resilience, declining just under 1% to 51,711.65. The VIX Volatility Index surged over 12% to 18.70, signaling a sharp spike in fear. The 10-year Treasury yield rose to 4.70%, up nearly 1%. The dollar index edged higher to 101.44. In commodities, WTI crude oil jumped almost 5% to over $92 a barrel, while Brent crude broke through the $100 mark. Gold fell nearly 2% to $4,051.80, and Bitcoin dropped more than 1% to around $65,195. So what drove today's market action? The answer is clear: Tesla. The electric vehicle giant reported earnings that badly missed expectations, sending its stock plunging over 10.9%. This single event triggered a massive risk-off shift across the entire market. Investors fled high-growth tech stocks and rotated into defensive assets and commodities. Energy was by far the strongest sector, fueled by oil prices breaking through key psychological levels. Technology stocks, especially those tied to electric vehicles and artificial intelligence, were the hardest hit. Let's look at the global picture. Asian markets opened relatively calm, with China's Shanghai Composite and the Shenzhen Chinext both closing slightly higher. This suggested some policy support expectations were at play. But European markets likely followed the US lower, unable to sustain Asia's brief strength. The US session saw a sharp gap down at the open that only got worse as the day progressed. The Nasdaq took the biggest hit, dragged down by Tesla. The Dow held up better, showing some rotation into blue chips and defensive names. The inflection point was clearly Tesla's after-hours earnings release. The stock was the emotional leader to the downside, and it dragged the entire high-valuation tech sector with it. Now let's talk about what we got right and wrong in our morning report. We correctly identified that the market would show structural divergence, with energy and defensives outperforming. But we completely underestimated the magnitude of the move. Our call for a sideways consolidation was wrong. The market delivered a one-way sell-off. The biggest surprise was Tesla's earnings miss and its outsized impact on the broader market. The market had been too optimistic about profit resilience in the AI and EV space. It also largely ignored China's modest rally and the relative stability of the yuan. This shows that when global risk appetite collapses, regional positives don't matter. Looking at the triple linkage between currencies, equities, and bonds, the dollar strengthened slightly while the yuan weakened only modestly. This suggests some safe haven demand for the dollar but no panic capital flight from emerging markets. US stocks fell sharply while Chinese stocks rose, creating a short-term divergence. But if US futures continue to slide in Asia, Chinese markets will likely play catch-up to the downside tomorrow. The 10-year yield rose alongside falling stock prices, creating a classic sell-off in both stocks and bonds. This usually happens when liquidity tightens or inflation expectations re-emerge. Gold's decline is particularly telling. It suggests investors are selling everything for cash, signaling early-stage liquidity stress. What should we watch tomorrow? First, US futures during the Asian session. If they keep falling, Chinese and Hong Kong markets will likely open sharply lower. Second, whether Brent crude can hold above $100. Third, how Tesla trades on its first full day after the earnings bomb. Our strategy is to stay on the sidelines. Do not try to catch a falling knife. Wait for the VIX to drop back below 17, or for Treasury yields to turn decisively lower, or for Tesla to find a clear support level. Our probability assessment for tomorrow is 15% for an up day, 35% for a sideways day, and 50% for another down day. The market is sending a clear adjustment signal. Stay cautious and protect your capital.